Hi, we have ended the third quarter of this year, and you see the S&P 500 has ended even lower than what we've seen in the second quarter during June. The S&P 500 index has fallen 25% year to date, and right now we are hovering below the 3600 points level. Okay, that's even lower than what we had in June, where I think the low was around 3,600 points. So you see, we have ended the quarter even worse than what we thought would return. But regardless, in this video, I'm still going to share what is my portfolio return for my CPF investment portfolios, because I know it has been a difficult period for all of us. And my CPF portfolios are not spared either, right? You see, I do have a dollar cost average investing strategy, and I want to share the update on what's happening between these two portfolios. And the first portfolio is in Endowus, right? Because for Endowus, I do dollar cost average $1,000 monthly on the first calendar day. And for this Endowus portfolio, I invested in a Lion Global Infinity US 500, which is a unit trust that tracks the S&P 500 index. So that is what I'm 100% invested in for my Endowus portfolio. I did not choose their core portfolio. I just chose the Fund Smart strategy because I want to 100% focus on S&P 500 for my Endowus portfolio. And then I do have another CPF portfolio, which is with MoneyOwl. Is another bionic advisor, and every month our dollar cost average $1,000 monthly into the MoneyOwl CPF portfolio. That is a 100% equity portfolio which invests in the Lion Global Stock Index Class C. Now that is a unit trust that tracks the MSCI World Index, so it's kind of different from Endowus, right? Endowus is for my S&P 500, and then MoneyOwl is more like a global stock index fund. Also, if you are unfamiliar with the CPF investment charges for UOB Kay Hian, which is the cheapest partner I believe for CPF investment scheme, they do charge $2.14, that is GST included, per order. Alright, and also every quarter they will charge a $2.14 of platform fee because you're using them as your broker, right? So they do have to charge this platform fee every quarter. So for my two portfolios, I will need to pay 2 times platform fees, and then for each order I need to pay $2.14. So with two portfolios of dollar cost average strategy per month, I do have to pay $2.14 multiplied by 2, because one is for Endowus and the other is for MoneyOwl, right? So that's 2 times 214. So if you think that all these fees are too expensive for CPF investing, then you have some cash, right? Then why not you take a look at the sponsor, because they can offer you some free gifts when you sign up. I want to ask you one simple question. Do you believe in Tesla? Because you have missed a free Apple share, free Microsoft share, and even free Google share in the previous Weibo campaigns. But do you know that Weibo has upped their game again? And this time round, they are giving you $130 worth of Tesla shares. You heard that right? It's $130 worth of TSLA shares. That is the record high. What you need to do is to deposit at least 2,000 Singapore dollars and make one buy order of US stock or ETF. Also, this time round, you have to complete an options trade, so you can buy a put or a call option for the short term, and at the same time maintaining your balance of 2,000 SGD by not making any withdrawal orders for 30 days. And you must be wondering why $130, right? Maybe it's related to the Tesla stock split recently from 1 stock into 3 stocks. So hurry up and sign up for a Weibo account using my referral link down below. Yes, so like what I said, if you have cash, there are much more better alternatives for you to invest, because there are much cheaper options in terms of fees, in terms of platform fees. Some of them don't even charge it, right? But for CPF, there isn't really any good alternative, because all these have to be regulated by the CPF and MAS. They have to align on this, right? That's why there were supposedly some higher charges when you use CPF to invest. Of course, when you invest with CPF, you are ready to take on the risk that you will be able to get more than 2.5% per annum. Because with your CPF ordinary account, it's already paying you 2.5% interest risk-free, that's guaranteed. Whereas if you actually take money out of your CPF to invest, not only you are foregoing that 2.5% annual interest, you also need to make sure that your investments can generate more than 2.5% for it to be worthwhile, and that is obviously not happening this year because we are currently in a bear market. So with that, let me take you through my first portfolio with Endowus, and you can see how the portfolio returns has been like. Okay, my Endowus portfolio has been brutally damaged. I mean, if you look at the investment value, it has an unrealized loss of more than 3k. But in today's video, I will just focus on the CPF portfolio, right? Because that is where my money is invested into, where I do my dollar cost average monthly of $1,000. Okay, and right now you can see that this investment value is at 22k, but I have an unrealized loss of close to 2.5k Singapore dollars. That represents a 10% unrealized loss since I started this portfolio in 2021. And if we look at the details, you can see that this is actually a fund smart portfolio, and I specifically only choose one fund, which is the Lion Global Infinity US 500 that tracks the S&P 500. So if we zoom in on the transactions, you can see my activity and balances, and this is my dollar cost average activity, right? Every month on the first calendar day, I will set in my instruction to deduct $1,000 from my CPF OA, and that is what is happening right here in the 1st October 2022. So my dollar cost average instruction has been automatic. I don't have to meddle with it, and every month I will just invest $1,000 in the S&P 500 portfolio in my CPF OA. Okay, and right here you can see there is a cashback received. This is actually the Endowus trailer fee rebate. So Endowus kind of rebate the Lion Global Infinity Fund cashback at 0.28%. So that is like how they give you back the savings in costs. And if we were to look at the performance just on my CPF S&P 500 portfolio, this is how it is, right? Last year it has been quite stable, right? You see all these straight lines quite stable. But since the end of last year, from December onwards, things have been really choppy. You see all this up and down. This year has been really volatile, especially you see the huge drop in June. Okay, that is the first time we experienced the record low for this year. But in today's video, you realize that actually September may be the low, because as at the end of September, we just breached the June 16 low of 3,600 points for S&P 500. Now we are less than 3,600, 3,600 points of S&P. And that's why you can see this rapid decline since the start of September. And I told you guys, right, September has always been historically a very bad month, statistically speaking. And if we look at these returns, right, based on all-time YTD 1 month, 6 month thing, okay, the most accurate will be taking the time-weighted return. All-time, I'm down 5%, YTD I'm down 18%. So had I not invested my CPF since 2021, I would have been positive by at least 2.5 to 5% based on the CPF interest. So that's the risk you're taking when you're investing your CPF, right? You have gotten a guaranteed 2.5% interest in your OA, but now you're putting your money at risk to invest in the equity markets. So this is what may happen if you invest at the wrong timing. But as cliche as they say, you can't really time the market. This may just be a bear market season where it's good to accumulate equities and funds at the low cost, and you can dollar cost average even larger quantities because of this cheaper value. In the long run, it is expected to go up, but nobody really knows how long the bear market could last. So this is my Endowus portfolio return as of now. If you want to take a benchmark, if you want to laugh at it, that's fine, because I've been really transparent in my past 1 to 2 years of sharing my Endowus portfolio already, so I'm not afraid. If you want to look at what I'm invested in for my CPF, this is the fund that I'm invested in, the Lion Global Infinity US 500, okay, which tracks the S&P 500 index. The total expense ratio of this fund is at 0.34%. This is after the fund level fees and the cashback that Endowus returns to you, okay? And if you add in the management fees charged by Endowus at 0.3% per annum for FundSmart, your total fund level fees will be 0.34 plus 0.3, that is 0.64%. That is the total expense ratio that you have to consider when you are doing such CPF investments. So yes, if you want to explore other kind of model asset allocations apart from the FundSmart portfolio, you could take a look at their flagship portfolios in the core portfolio. Now, as of the current date, Endowus haven't had any news on CPF investing in Amundi funds. I talked about it in my last update. Amundi funds is still not available for CPF yet. And they are working very hard to bring this fund in because I think there are a lot of regulations surrounding CPF investing. But fingers crossed, because once Amundi funds are available for CPF, I'll switch over, right, because it's much lower cost. And that will be my very short update on my Endowus portfolio for CPF. Alright, so that's for my Endowus portfolio. The next one is MoneyOwl Portfolio. You think MoneyOwl Portfolio will fare better because it's a global stock index, right? It seems to be more diversified because it's not US centric. It's not 100% focused on US. But do you think the other parts of the world are faring better? We shall see in my MoneyOwl update. Okay, next is my MoneyOwl portfolio, and in my MoneyOwl portfolio, I only have CPF investing, and right now I have invested $5,000, but the portfolio value right now is $4,744, which means I have an unrealized loss. and that is quite normal, right? Because I only started MoneyOwl since June 2022 this year. In fact, I actually bought at the June low because I gave my instruction at June 15, right? So you might as well buy the June 16 low at that point in time. But September has proven to be even more brutal than June, and you can evidently see it in my MoneyOwl portfolio right here, because I have an unrealized loss of more than $250 based on my investment cost being $5,000. Okay, I have deposited $5,000 so far, but my net return right now is $4,744, which is a simple return of -5%. Okay, and if we look at the holdings, this is what is invested into the Infinity Global Stock Index Class C SGD, which tracks the MSCI World Index. So it's an equity portfolio that tracks the World Index ETF. It's not a bond. There's no bond allocation because I don't think that it's wise to hold any bond using your CPF, because the CPF is already giving guaranteed 2.5% interest. So why should you risk taking out the money and put in bond? Okay, I think that's not a very wise choice now. You see, my dollar cost average plan monthly for MoneyOwl is the 15th calendar day, and I will deduct $1,000 from my CPF ordinary account, okay, based on my CPF operator UOB, which charge the cheapest, and then it will automatically buy those funds for me. Okay, if we look at the transactions and the statement, then we can see what have I invested in the time intervals. Now, my recent dollar cost average was done dated in 20th of September, because there's a little bit of lead time depending on whether it's a work day or weekend. So it will only invest like 2 working days after the weekend or something. So you can see that although I send in my instructions by the 15th calendar day, there will be a few working days for them to consolidate and pass the instruction to CPF and then to make the purchase on my behalf. And if you want to look at the asset allocation for MoneyOwl CPF Global Stock Index, you can see that mostly is highly concentrated in information technology, financials, healthcare. So slightly more diversified than the S&P 500 because it's a world index fund. And similarly, if you look at country allocation, it's not just the United States. United States is just 68%, followed by others, and then Japan being the second largest country on this list. So it's much more diversified than S&P 500. But much more diversified doesn't mean that it will return higher or return lower. It's just that there is more diversification if you prefer that way. So you can see that my MoneyOwl portfolio is rather different from my Endowus, because my Endowus is focused on S&P 500, focused on United States growth. Okay, whereas my MoneyOwl is more focused on the world, focused on the global stock index. So it's slightly more diversified. That may be a good thing or bad thing depending on how you see it. So for MoneyOwl, right, the CPF portfolio fees are as such. As of the current date, until the end of 31st December 2022, there isn't any advisory fees, there isn't any platform fees. So you're kind of investing for free under MoneyOwl. That's why I took up their offer and started to invest. Okay, so after 31st December this year, we'll see whether they will extend this promotion. Most likely not. And if they are not, then most likely they will charge like the platform fees, right? Advisory fee of 0.6%. This is similar to their dimensional portfolios. So yeah, that's my MoneyOwl portfolio for you. Also not doing well, -5% return as of now. Alright, welcome back. So you can see that my MoneyOwl portfolio isn't doing very well either, despite I bought at the low during June 16. So you can see that we can never time the market, despite us thought that we bought at the lows, but the lows may go even lower in the bear market. But if you took it from another angle, at least you can be relieved that you are not buying at the market high. So if you are in an accumulation phase, for example, you just started working, you are in your early 30s or even early 40s, right? You haven't started retirement, or you haven't started drawing down from your retirement funds yet, this is a good time to actually accumulate over the long term, because you're investing in a broad-based index like the S&P 500 and the MSCI World Index. So there's a large portion of diversification and there's no concentration risk involved if you are investing using your CPF funds. So that's just something that you have to take note, but I understand that not everyone is willing to take out their money from the OA, right? Because it pays you 2.5% guaranteed. So I'm just saying that this is what I'm doing. I'm not saying that you should follow as well, because everyone has their own risk appetite and you should not take this as financial advice. So if you do want to learn on my full spectrum of my dollar cost average investing strategy video, then take a look at this video that I did earlier right here, because I'll show you how I invest $4,000 monthly dollar cost average.